Okay. Good evening, good evening. Tukoaje? How was our day? If you can hear me, as always, give me a thumbs up. Let me know we are together. Let me know you can hear me. Today I don't intend to take a lot of time because we had a rough day with my people in the other group, but at least it was better than yesterday. This is the paradox of trading. Some days you enjoy the profits, some days you enjoy the losses. So I will be very brief because I want us to understand some few things here, and then we can continue. So where do we start? Understanding fear and greed in Forex trading. This will help especially those who trade gold, but all the same, fear and greed can help anyone to better understand the markets and understand why the market is moving the way it is moving. See, most of the times we do analysis. Like today I did some very good analysis. If you can look at this was and I taught us this, I remember I did, about the Asian ridge. Yes, I taught about the Asian ridge, and I said that every day you mark the Asian ridge from 2 a.m. to 9. This is Kenyan time, and what you do is that when the market takes the Asian low first, you look for buys. When it takes the Asian high first, you look for sales. Now this is the paradox that I had today. This is the paradox that I had today. Okay, this was yesterday's trade. It's supposed to be here. So if you look at this, and this happens almost every day. If you look at this, this was yesterday. It is still worked, and we had a small move here with my good people, this one, but we were unable to get this sell because we had slept. But I want you to look at this. I had done my analysis very well, and I knew what the market will do. But this is where the market did something to me. You see, there was a change of character here. So of course I knew if there's a change of character, oh Jesus Christ, sorry. And there are people who are just enjoying me talking and they cannot see anything. That's not good. You can see my screen now. Yani, I've talked for 10 minutes and you're not seeing anything. You will not go to heaven. Now, I was saying I had done my analysis here, and I knew what the market will do and where the market will come to. But I want you to look at this. Of course, we know that after every break of market structure, a new trading range is formed. We came where? Here, we came here, we came here. And the market was just selling. So the first thing I did was to mark my liquidity, these swing highs, okay, like that. And I knew that the market will come up or just retrace. But look at where my POI was, because at the end of the day the market will come here, and I'm suspecting the market will come here tomorrow, because tomorrow it's Friday, so we only expect pullbacks. But now let's come to the where we can see what is happening in the daily. I have discovered something in Forex. Patience and discipline are the movers of the market. Patience and discipline. Patience and discipline. I remember today we were doing some trades and it was GU here, because I'm one person who really trusts my analysis skills. I don't know why, but I just trust them. So we took a trade from here. This it's not even a valid, but we took from this FVG. So those from the group, I hope you can see what I did here, because there wasn't any other what is it called? I didn't see any other order block here. So I came and did two things. In the order block, two things happen. The market first sells or buys from, kuna watu hawaoni screen. Can everyone see my screen? If you can see my screen, give me a thumbs up. If you cannot see, give me a thumbs down, so that I know. Looks like okay, Vero, you can leave and join again, because looks like it's only you who cannot see my screen. Yeah. So I'm saying this is what happens when you are trading FVG. Literally, I don't like trading FVG. Today I went against my rules and it did us bad, but it's okay. So the FVG first trades from 0%, and then your stop loss should be at the 50%. Okay, so we got this move, if I'm not wrong. But now the issue is this was our target, this one. Okay, that was our target. The next way you trade is where we have the 50%. Where is the stop loss? At the or just below the 100%. We also got this move somewhere, but our take profit was above this liquidity, and that is where you missed, because the market came uh, almost hitting our TP, and then it reversed on us. Now, I was talking about discipline and patience. I sent this setup at, I think it was about 5:30 a.m. Look at when it was activated. This was when, because I think we didn't get this, we got this one. This one 3:15 p.m. So imagine waiting, all these noises happening, you wait for all those hours from about 5:30 a.m. up to 5:15, and then we were taken out. And I usually advocate, once you put your, or once you have your TP in place, don't remove the TP, and don't move the TP. It's either your TP is hit or your stop loss is hit. That is what discipline is. So, are we ready for today's class? Are we ready for today's class? Are we ready for today's class? Good. So I want us to look at something. I don't know. I cannot entire screen 2. Yes. Good. Even this one. Just give me a minute. I want to change something here. You can be telling me, how was your day today? How was your trading day? How was your trading day? Did you get anything? Someone tell me in the comment section, how was your trading day? Did you become liquidity today? Or you moved with the market movers, market makers? Stop loss hit success. By the way, I want to recommend a book. I had sent it to the other group. Let me see whether I'll get it. I'm doing this so that we get prepared mentally, because today's class will be a bit crazy. I had sent that book. It's called The Best Loser Wins. Go and look for this book. Traders, go and look for this book. I'm telling you, this book will be it will be a good book for you. This is the book I have read. This is the book I have read, and I'm telling you, I'm not afraid of losses. I'm not afraid of losses, because losses are part of the journey. So I tell people, it's either your TP is hit or your stop loss is hit. These things about partial profits, it's good, by the way. I'm not against it. It's good, but you need to train your mind. You need to train your mind. You need to train your mind so that you will be okay when you lose, and you'll also be okay when you win. That is the only way you can look at a $4,000 trade na inarudi hadi 100 and you are still okay with it, and maybe it will go back to 4,000 or it will hit your stop loss. So that is very important. Very important. So today we start by looking at fear and greed. index. So just go to Google and search fear and greed index. And then you see this one for CNN. You click that one. You click that one. And you will have something like this. You will have something like this. So just give it some time. It's loading. Perfect, perfect, perfect. Can you see this? So for us to understand fear and greed index, I think the best thing to do is to match this with XAU USD, like this, like that, like that, like that, and then 4 hours is good. Perfect, perfect, like that. So I want us to read what fear and greed index really means. Now anything from 0 to 25 is extreme fear. Extreme fear. I'll send the book in the group. I'll just send you the PDF. I'll send you that PDF in the group so that you can go through it. So anything between 0 to 25, extreme fear. Then we have fear, neutral, greed, and then extreme greed. So what does this mean in trading? What does this mean in trading? When we are in extreme fear, it means that the investors are worried. So markets can be oversold. Okay? So when we have extreme fear, it means that investors are worried. And when we have extreme greed, it means that investors are overly confident. And so what happens is the market is overbought. So this is what it means. When there is fear, we have what we call safe haven currencies. Safe haven currencies. One of it is US dollar, another one is the Swiss franc, another one is the JPY, and then we have the euro. And then that is where we have things like gold now. Gold, silver, those things, those pairs. So that means when there is fear, investors are worried. Investors are worried about their money. So what happens? They take money from other currencies and they hide the money in currencies like what? Like gold, like USD, like JPY, like euro. Okay, but most of the time they will hide money in the safe haven currencies. Safe haven currencies. So that means that, let's say you are trading XAU USD. XAU USD. Now these are what we call fundamental analysis. Okay, you are trading this one, XAU USD, and where is the market is, or the investors are in fear. The investors are in fear. So what happens? What happens is that investors will remove their money from gold and they will start putting the money in, they remove their money from dollar and other currencies, and they start putting their money in what? In gold. Now, if you remember yesterday, uh, because this was yesterday, the 21, yeah, Tuesday, the market sold, this is gold, it is sold against a lot of people's expectation. But I had actually marked it. I can't remember from, I had marked all these things. So why was the market selling? Because there was news that this guy, Powell, this US guy, that he will cut interest rates. So people knew that the best place, oh my God, a lot of people want to join. I was not seeing that. So people knew something, that if the interest rates will be cut, or there will be a cut in interest rates, that means gold, I mean, USD will be strong. And even as we speak, USD right now is still very strong. They knew that USD will be strong. So what happened? There was a lot of panic, and there was a lot of fear. A lot of panic, a lot of fear. So what happened is that people withdrew their money from gold, and then they put it into, or they invest into what? Into USD. They invest into USD. But what happened? You can see that there's some news that Trump, that was released, that guy that was jailed, he has a crypto something like that he was released. So what happened? Fear grips in again, because that means that people are now losing trust in the US dollar. So what happened? That is why you can see these moves happening right now. This is gold trying to retrace to its place. Now those are fundamentals, and you can come here and do the technicalities. The market will come here and then go up. But once you understand how to use this thing here, it becomes easier for you to trade, especially pairs that have JPY, that have USD, that have what else? Euro. So someone would be asking, what happens then when Euro and USD are trading together? What happens when Euro and USD are trading together? Or in a scenario where we have CHF and ZD like today. I was telling the people in my group today, let me show you. Let me show you just in a few. I was telling them there is this trade. Actually, there are two trades. I have held them from yesterday. I'm not a swing trader. I'm an intraday trader. Intraday trader. But look at this. You see these two trades. This one, NZD, CHF. I've held these trades since yesterday. They had even gone to a drawdown of about 50 USD. 50 USD. Now, the reason I'm holding these trades is not because that I'm hopeful. It's because I had done my analysis. So these are what we call technical analysis. These are not fundamentals. These are technical analysis. So I did my analysis. I knew where the market should come. Okay. I knew where the market should come and what should happen if the market comes there. So what I did, because you can see that those were sell orders. The reason they were sell orders is because of where the market was. If you look at this, if you look at what is happening here, the market was making a series of uh, lower lows, lower highs, lower lows, lower high, lower low, lower high, lower low, lower high, lower low. So I was expecting when the market comes here, it taps from a POI, and then what happens? It continues to sell. But when the market got here, it disrespected my rules completely. My rules were disrespected. But I knew that there was another POI up here, because if you take this whole move here from that high to this low, like that, or even you can come to this high here. From that high to this low, you can see that when the market broke this, low, it did not sell from a premium price. A premium price in sense that even though this looks like the premium price, we have liquidity up here. Okay, you see where I took my trades exactly where we have liquidity. You see exactly where we had liquidity. So I was expecting, even if this market goes up, it cannot go up beyond this FVG, and I was okay with that drawdown. But the market came disrespected because there was news. There was CHF news. That is what pushed the market up. But when the market goes up, it will always come down. It will always come down. So I even have another limit here, but it has not been activated yet. And I'm expecting that this will happen when I sleep. Something like that should happen. So imagine I didn't know the fundamentals of trading. Because of fear, I could have left the market, which is good because you will save your what? Your capital. But what I usually tell people is the best thing is to make sure that you unacheza na lot size yako. Cheza na lot size. So if you do a 0.1 trade or a 0.2 trade, it becomes easier for you to hold trades for long. Okay, so that is what you need to know about fear and greed. So right now there is a lot of fear. What is happening? Every pair that has USD right now, when you look at it, USD is gaining tract. USD is gaining tract. I want you to look at this trader sentiment. I think I taught this last time. Once you check your fear and greed here, and what you see is what people are, or the investors are in fear, almost getting to extreme fear. You come here now. This is what we call trader sentiment and currency strength. Both of them are here. Trader sentiment and currency strength. So I don't know why my internet is slow today. What is happening? What is happening? Just okay. It's loading. Today my internet has just decided to be slow. Slow like that, slow like that, slow like that. All right, can you look at this? Let's go direct to where we have gold. Here, XAU USD. I told people, when you see a lot of traders doing something, market makers will try to do the opposite, because they don't want you to make money. They want to make money by themselves. So look at this. 77% of traders, and these are real accounts. If you read here, these are real accounts. These are not demo accounts, real accounts. So 77.5 of traders are buying. Look at how slow the market is. Can you see this? Because this move, this is yesterday's. This is yesterday's move. So from yesterday till now, this is the farthest the market has gone. There. But look at what happened yesterday, because there was a lot of liquidity here. See this to swing lows. All this was liquidity. So between here, between this move, this is 4 and this is midnight. So between 4 and midnight, this move had already happened. All this move here, all that move. But look at how it is taking forever for this market to buy. Why is it taking forever? Because the sentiment, the market makers want to trade against the majority. The market makers want to trade against the majority. Look at this. Look at Euro USD. Euro USD. 60.6% of traders are doing what? They are buying. Look at what the market makers are doing. The market makers are selling. They are selling. And I'm actually in this sale. Very perfect. I'm in this sale. And this is the sale I want to run till overnight. I remove it tomorrow. Okay? So, let us look at what is happening with the GBP USD. GBP. Can you see? 66% of traders are buying. And actually, I was supposed to be one of the buyers, to be one of the people that are buying, because every analysis is showing me that we should be buying. But look at what is happening. The market makers don't want you to make money. So what will they do? They will try to push the market against the masses. And that is why I tell people, once you are done with your technical and fundamental analysis, come and look at what are the majority doing. What are the majority doing? If they are buying, try to look for opportunities to sell. I'm not saying that this will happen all the time, because there are times you'll be selling and maybe the masses are buying, and then the market makers get into that move. So you also need to be very careful, very careful. But this helps you to understand what is happening. If you are a scalper, can you see where we have the currency strength? Let's say you are not an intraday, you are even a scalper. You are a scalper. This is what happens. If you look at this, we have short term. What is happening in the short term? Right now, Bitcoin is buying. That means if you are trading Bitcoin, you can enter the market right now and scalp like 10 pips and move away with like 500 $500, because you know that Bitcoin is buying. And this is what you do. Always, if possible, trade the strongest pair against the weakest pair, if possible. Trade, look at this for example. We've seen that in the trade sentiment, I think we can have it here. Trader sentiment. I want to teach you something very powerful. This is what will make you stand out from your peers. So if you look at what is happening right now, GBP is losing strength, or GBP is weak. GBP is weak. Now if you look at USD, it is equally not that strong, but at least it's stronger than GBP. So you'd be expecting that right now GBP is selling. Okay, GBP is selling. So what is happening in the charts? GBP is selling. GBP is selling. Now look at this, and that is why you see there is a lot of wicks. There's a lot of wicks because both pairs are currently strong, or weak for that matter. Both pairs are currently weak, because we need to see if any of the pairs is that strong. We need to see moves like these ones. You see, moves like this one. But when you look at this, there's a lot of straining, because both pairs, both GBP and USD are weak, though GBP is weaker. That is why the market is selling. But what are the traders doing? The traders are buying. The traders are buying. That is why there will always be liquidity. Liquidity. And let me tell you, most of the times when you enter in the market, because emotions are very high, sorry, emotions are very high. So you can even come and see something like this, and maybe even this one, and then say, it doesn't matter. My analysis says that we should be buying. And it happens all the time. That is why I let my trades either hit TP or SL. That teaches me to have discipline. That teaches me that when I come and do my analysis, and for example, I see something like this, that the market should be selling, I should not go against what is happening here. What I should go against is what is happening here. Okay, so if these people are buying, I look for sales. I'm in this trade NZD-CHF. You see, NZD-CHF, 74% are they are buying. Let us see what is happening. NZD-CHF. Look at this. Look at this, all this move. So as traders are buying this pair, market makers are doing what? They are moving the pair down. They are moving the pair down. And that is why I cannot remove my trades. Even though we look like we are buying, I cannot remove them, because I know the market makers will always win. Retailers cannot do what? They cannot win against the market makers. So at the end of the day, maybe before I wake up tomorrow, we will have sold. We will have sold. So that is how you use fear and greed and trade sentiment. Trade sentiment. Trade sentiment. And then if you are a scalper, I highly recommend, if you do scalping, I highly recommend you use currency strength. I highly recommend. you will be better than many people, because there are people who just scalp for the sake of it, for the sake of it, for the sake of it. But now, if you use this, you'll be able to know why, and you should be scalping. It becomes very easier for you. So the next thing I want us to look at, I have like 17 minutes. We were to look at three things. One is fear and greed index, and then we have understanding the optimal trade entry. Optimal trade entry. Now, if you look at my trades, I usually do not have a very high win rate. My win rate is about 30%, but I'm rarely in drawdown. Rarely. Imagine, people are selling you maybe things to do with 80% win rate, 70%, which is good. It is good. It's good to have such win rate. But me, I know myself and I know my strengths. I know my strength. Then I trade SMC. SMC is known for sniper entries. SMC is known for sniper entries. So what I usually do is that I don't I look for sniper entries, and then I look for entries that will have I will not draw down too much before I start making profits. And that is why most of the times I let my trades hit either take profit or stop loss. Simple as that. Now I want you to look at some few trades we did today. I want you to look at some few trades we did today. This is what? NZD. No, let me look for something like okay. Why is this thing hanging? Why are you hanging, my friend? My friend, why are you hanging? Let us look at maybe GBP USD. GBP USD. GBP USD. My people in the group, our trade is almost being activated here. So how comes I cannot see the trades we did today? This is crazy. This is crazy. Let me see whether I get it here. Yeah. Let's see what we have here. Look at this. We got this today, and the stop loss is what? 3.5 pips. 3.5 pips. 3.5 pips. Let me show you another one. The stop loss here is what? 4.6 pips. Okay? 4.6 pips. Here. So TikTok guys, are you getting what we are saying? They are getting it. So this was 4.6. Look at this. 2.0 stop loss. 2.0. 2.0. So I want to show you how you can be getting such sniper entries. Look at this. This was what? 3.3 stop loss. It is that move there. 3.3 stop loss. Okay, I don't think we have. And I'm waiting for this move, by the way. I don't know which year. I don't know which year, but it will happen. It will happen. This move here. So how do you get such sniper entries? Sniper entries. I remember we've done top-down analysis. But today I want to teach you two things only. One is fib retracement, and another one is, if time allows, the volume profile. The volume profile. So let's take any of either downtrend, but maybe let us work with this one. Let us work with this move here. And then maybe we do 30 minutes. But this can happen with any time frame whatsoever. Any time frame whatsoever. Any time frame. One of the things that is challenging, for example, let us look this, it's a bit challenging, is to understand where the market is going and why the market is going there. So let's say, for example, you came here and saw this stop hunt here. Let me change this to white. Then you can apply. So let's say you came here and saw this stop hunt here, or BOS, whatever you call it, and then you saw this break of market structure here, or change of character. You saw that change of character there. So you know that you have a trading range already. Okay, you have a trading range. What is the trading range? You will wait for this move to happen from here to here to here. Okay, you will wait for that move to happen, and then that tells you that you have a trading range from that high to this low, from that high to that low, like this. And so you want to catch like that. So what do you want? You want to catch once the market retraces, you want to catch this move, because you know that we are already bearish. You know that we are already bearish. So where do you catch this move from? Where do you catch this move from? Where do you catch this move from? Okay, there's something here you need to know, that one, this is liquidity and it should be taken out, because the market broke structure, retraced, broke structure again. So that is liquidity that should be taken out. Okay, but let's assume you are not seeing this. Close your eyes, do not see this, and then you want to know where the market will retrace from. Now what you do, you take the fib retracement. Okay, you see the fib retracement, and what do? You run the fib from that high to this low. Okay, the fib does not work 100%. It will not always work, but in most cases it does work. Okay, you run it from that high to this low, and then what we call the optimal trade entry should be around this area. You see that area? Should be around that area. This tells you, well, this was not respected because you can see it came up to here. And the reason it came up to here is because of two things. Number one, there was FVG. Actually, I was waiting for this market to sell, which it did, but I was waiting for it to sell from the 50% of the FVG. And I remember we waited for this market with the people in the group. It did not come to our POI. That is what happens. Sometimes you miss it. I was waiting for that market to come there and then continue selling, because it had already taken from the base of this POI, of this FVG. Okay? But the market is the market. It did not do that. Okay, let us look for another example. Let us look for another example. Let us look, for example, from this high to this low. Okay? That high to that low. What do? You take the fib retracement. You want to catch the move as it goes down. Run it from the top to that bottom there. Okay? Run it from the top to that bottom there. What does the fib retracement say? That this market can sell from anywhere around that area. Okay, so what you usually do is to try and look for order flow. So once you get this, ask yourself, do we have, because I don't like, a lot of people, this is what they do, this is how they use the fib retracement. Sometimes it works for them. You see where the market is right now? So they come and take from 50%, and then the stop loss will be slightly above that high, and maybe they target 1:2. 1:2. Truth is, sometimes it works, but I cannot risk all this. I cannot risk 23 pips. 23 pips is my take profit. I cannot risk 23 pips. So this is what I usually say. And that is why the people from my group, you can see that we are missing a lot of trades. We are missing a lot of trades. The reason that is happening is because I want to follow my rules. I want to always follow my rules. If the fib retracement does not work, I leave that trade and I wait for another setup. The truth is, in future, the market can come and tap from my POI, but for me that is too late. So let us take this move, for example. You run the fib from top to bottom, like that. Where do you expect to get a move? From between 0.79 and 0.62, like that. Like that. So once that is done, the next thing is for you is to look for a POI. Either on that, if you see a POI here, it's good. If you do not see it, it's still good. And I saw that this POI, which was not respected yesterday, the people that I'm trading with are seriously seeing fire. Fire con fire. Can you see why we were stopped out? The people from the group. Give me a thumbs up if you can see that. God, people from the Elite group. I told you, the reason we lose trades is not because we do not understand what we are doing. The market can just decide its own thing. And that is completely not your, that is not your issue. That is the market. You see, the stop loss was 2.2. And then where do you target? You target the previous low. Or probably you target, let's say even if you target 30 pips. or 20 pips. But you see what the market did? The market came, took us out, and it continued to, and I don't have a problem with that completely, because I could not have used this, because it took from this POI, but for me, I could not have taken a trade from this POI because it's not making sense according to my strategy. That is why you need to be ready to lose some trades or even most of the trades. I told you that my strategy from my broker, they are showing me that my win rate is 30%, but I am still not in drawdown. 30%, because I will risk 2-3 pips, and then I'll target maybe 20-30 pips. So that is 1:10 or 1:11. So I can lose 10 trades, and if I win one trade, I compensate the 10 trades. So you win 10 trades, and one losing trade takes you home to your village. That is the issue. That is the greatest issue. So let us look at another example here. This one. Take your fib, run it from top to bottom. This one was well respected. Okay, well respected. You see, when the market came to that point, that is why it is doing what? It is selling. And we expect that that move should take that low before it starts to retrace again. It should take that low before it starts to retrace again. That is why the people in my group, you've seen that I have sent this this POI, because I'm expecting that the market just needs a trigger. It will come, it will be triggered, and then we continue to sell. We continue to sell. So let me look for another pair, see what is happening in Euro USD. And this time, let us use the 15 minutes time frame. So if you look at, okay, I don't want to tamper with my analysis here. So let's, for example, take what is happening here. This is what is happening. You see, you mark from this low to this high, like that. You want, when the market comes down, you take this trade and move with the market makers. So what do? My God, my time is up. You run the fib from this low to this high, like that. Okay? What do you expect? You expect that when the market comes in between this level here, 0.62 to 0.79, you get a trade from there. So what you do mostly is try to look at the confluences that you can see. I can see this breaker block here. I can see FVG here. Okay? And then what else? Mostly those are the two things I am seeing. So what you do is, for example, can you see this FVG? Because this is how I would trade this. I'll come and take my long position where the FVG ends, because I believe FVG must be filled 100%. Okay? And then there is another way you can trade this, where you have FVG. This is where we had FVG, from that high to this low. There. Let me remove this so that you can see. Can you see where you have FVG? So this FVG got disrespected. So what I would have done if I was trading this is to take this trade from the what is this? The 50%, And then most of my trades are 5 pips, mostly maximum 5 pips, because of this one, because we have another thing here. We have a breaker block here, and that is where the market took from. It took from the breaker block. But in case you don't see the breaker block, okay, in case you do not see the breaker block, and you put this where we have this kanene, you see this one, this where the body of this wick started, you still could not have been taken out, and that is like what? That is like 4.8 pips. Where do you target? You target this high, the previous high, and you have your 30 pips like that. You have your 30 pips like that. So can you look for another setup? And I need to tell you that these setups will not always be respected, but you can get a lot of setups, or you can get a lot of trades with this. The only thing that is an issue to me is because I use limit orders. So sometimes the patience of waiting for the market to form itself, sometimes it's not there. So I get trapped sometimes. So if you look at this, you can see that the market did not come to our area. If it doesn't, don't be involved in that trade. Don't be involved in that trade. So what do? You look for another setup. Look for another setup. There is a setup here from this low, because this is the low that broke this structure, to that high. Okay, so once you draw your POI around there, you look at what is around this place. What is around this place? So what I can see, because there was this liquidity here, I could not take any trade above that liquidity. So I need to look for a POI that is around or below this liquidity. What can you see here? What can you see here? I can see this breaker here. I can see this breaker block here. But this is a trade I could not involve myself in because it is not clear. The breaker is there, but it could easily have been disrespected. So basically, you use the fib retracement to try and get an area where the market will come to. Where the market will come to. And sometimes, if you don't, if you are unable to use that, you can use this one. This is called volume profile, fixed rate volume profile. I think this is what we learn next, because time is up. This is what we will look at next. Yes, you use the fib according to market direction. So you can use the volume profile. Once you click on it, for example, right now we are looking for sales. So I'm only interested with the red candles. So you click, and this is the last swing low. You click the first swing low to the last swing low. And then what you'll be looking at is where did we have most of the sellers. Let me change the color of this thing. The color. Let's do white. Like that. So can you look at this? We look at where we had the most what? The most sellers. Of course, you cannot be looking, you will look at because it's from that high to this low. but you are only interested at where we have the red candles. Okay, I hope you are getting the point. I hope you are getting the point. So where did we have a lot of sellers? We had a lot of sellers around this area, 108 plus 109. So we had a lot of sellers around that area there. That is where we had a lot of sellers. So if you use the fib from top to bottom, can you see what has happened? So this is telling you, this is conference. This is telling you that around this area, if you get any order block or whatever you get around this area, you can use it to sell the market. Let's see whether there was anything. If I was in this trade, whether I could have involved myself in this trade. Whether I could have involved myself in this trade. Okay. Hey, what is happening? This thing does not want to go. So around this area, we've seen that there is a possibility of getting a what? Getting a trade. So if this was me, I could have waited for this trade on this FVG there. That FVG over there. And you see, the market never came to our FVG. The reason market makers do this is so that when it comes to sell now, to buy, when now they are buying, someone will come and do their trade here, and then they will be taken out. They will be taken out. Good one, taken out. So sometimes it is not every time that you will be able to get trades. Let us look at the last example from this high to this. So let's see, where did we have most sellers? You see where we have 165, because it must be above it must be above the 50%. Can you see this? Where we have 165 and 120. So you just come here and draw that one like that. See how it came to my letter POI here. So from there, you look for an opportunity to sell. Okay. I'm not understanding why this thing is giving me this kind of pressure. So we look at how do we sell from this area. For example, you will find that someone had drawn this breaker block or order block, however you call it, like this. So you need to understand where do I take this trade. I usually tell people, if this thing is that big, draw something like this. Take your order from the base, and then stop loss we do 50%. You will not be taken out. Can you see? And it played out nicely. So that is how you use the fib retracement and the volume profile. I think what we'll do next time, I'll show you how you set the volume profile and all those things. Now, disclaimer, you can have all these tools and still lose in the market, because the moment you get to the market, the emotions are very high. Emotions are very, very, very high. Okay, So let's say, okay, our time is up, but someone is saying we try to look at gold. Try to look at gold. Okay, let's take this move, for example, from that high to this low. Okay, we need to know where will the market retrace to. You take the volume profile, you can click anywhere where we have the body of this green candle, because now we are looking for buys. You click from there to, Jesus, what is happening? Volume profile, from there to there, and then you need to look for anything that is below this area here. So what do you see? We have 1.2900, 1.3, and then 1.27. So coming down, I need to set these things so that you can see this. Okay, I don't know if that works. Okay. You can see that one now. I make it a bit dark like that. So we have 1.347, 1.27. So that's what you do. Let's say, because we have this one, we have 1.3, which to me looks like, so you take 1.3 and the 2.8, which to me looks like it's making sense. It's making sense because this is the largest place, or this is the place where buyers entered aggressively. So what do? Remove this, and then you can confirm with the fib retracement. So it is around our area of interest. So what do? You look for anything around this area that you can use as a POI. What can you see? I can see this fair value gap, that one, which also aligns with this breaker block here. Okay, but I usually want to use what is closest to my area of interest. So what you do is come, this is 15 minutes, you come long position the start of the FVG, and then maybe 5 pips stop loss, like that. And then where do you target? You target the highs, like that. Okay, so I want you to go and backtest this, and backtest in all, okay, mostly from 5 minutes time frame to around an hour time frame, and see the win rate of using the fib, especially the fib retracement. Forget about the volume profile for today, because we did not have enough time to do that. You can look at this, and then look at this. Let us, for example, take this one, the last one, from this low to that high. Where did we have a lot of buyers enter the market? And then it has to be below that level. It has to be below that level. Okay. So this retracement is actually happening as we speak. This is gold, by the way. It is actually happening as we speak. So where did we have a lot of buyers? Can you see where we have this one? 1.4. 1.4 to 950. Okay. So if you take this one like this, what can you see? The same thing is happening. So let us see, what is the Fib retracement saying? Fib is saying that we should get a POI around this area. Okay, so let us do an X-ray for these two POIs. One is the volume profile, the other one is Fib retracement. So one, let us start with this one. Why is the market reacting from this place? Of course, because there is a breaker block here. Okay, there's a breaker block here. That is why the market is reacting from this place. But from where I sit, this market, you can try this, by the way. You can try this. You can try this. Take a short position from there. Maybe 5 pips like that. And then where do you come to? Where we have this FVG. This FVG. Because this FVG, there are two ways this FVG will trade. There are two ways. Okay, that is one. That is one. There are two ways this FVG, and I believe this will be the main POI. One is that it will trade from the base. Where is the stop loss? 50%. You can target something here. I don't know how many pips. And then this will also happen. So it will go and then come down, take this low, and then take from this area there. And this will be the ultimate buy, like that. So this scenario is possible, because if you look at this is inducement. Okay, this is liquidity here. We don't have any other block here. This is pure liquidity, and it will be taken out. So my suspects, what I'm suspecting is the market will do this, come this, come that. Yeah, and I think with those few remarks, you can allow me to go and sleep. I had a long day. So I hope we have learned something today. Go and add that to your POIs. Add that to your mostly add that to your POIs. It will help you. It will help you when you need it the most. Yeah, that is why you see me, even if I lose trades, I don't like get angry. I don't get angry with myself, because I usually trade after a lot of analysis and all those things. And yes, sometimes the market will just decide to go against you. Sometimes you win, sometimes you lose. There was a time I won $2,800 and then I went back to drawdown. It happens. So this is the market. Each day we continue to sharpen our skills so that we become better. So good. With those few remarks, kindly have a good night. Good night. Mwenye ametuma nikaa afiki.